My name is Sam Isaac. I'm into leadership positions for the last 2 decades with big corporate houses in the aviation industry. If you look back, COVID-19 brought big changes everywhere. The way we do our daily life, the way we do business, the total outlook of the future got changed. A new normal is built up. Still, the changes are continuing. This pandemic put most of the business houses under tremendous pressure for survival. Many business houses are already closed down, and many startup firms are put on hold. If you are a business leader or running on business, or if you are thinking to start a new business, please spare a few minutes with me. I will be sharing a thought which will definitely transform you and your business. As we know that there are 2 traditional ways of making profit. One is increasing price or sell more, or the 2 to decrease the cost. As the demand is diminishing, the chances of increasing price and selling more is almost impossible. As the demand is diminishing, it's very difficult to sell more. Then how can we make more profit or at least reduce cost? Here, I'm introducing a new method of budgeting. Now you may think, hey, how budgeting can save money and budgeting can reduce cost. Yes, here is a method. It's a very old method, but very powerful. This is called zero-based budgeting, or in short name, it's called ZBB. Now, my method is little advanced than the zero-based budgeting, which is called zero-basing budget through activity-based costing, or ZBB through ABC. Let's look to the history of zero-based budgeting. It's not completely a new method. It was prevalent. It was developed by one Mr. Peter Fir in Texas, United States, and he was called as the father of zero-based budget. Mr. Fir was a manager at Texas Instruments in Dallas, who developed the idea of zero-based budgeting. He implemented zero-based budgeting successfully at his company in the 1960s and authored an influential article in 1970 in Harvard Business Review. In 1973, President Jimmy Carter, while he was the governor of Georgia, contacted him to implement ZBB system for the state of Georgia for their executive budget process. India has adapted this system of ZBB in 1986 by Prime Minister Mr. Rajiv Gandhi when Mr. VP Singh was the finance minister. Let's go through the details of zero-based budgeting. As the name suggests, zero-based budget refers to a planning and preparing the budget from the scratch or from the zero base. It is different from a traditional incremental budgeting, which is based on previous year budgets. The process of zero-based budgeting involves a review and justification of each and every line of expenditure and revenue on the current scenario, considering the socio-economical and technological changes, and by opting the best possible alternative to reduce the cost or to increase the revenue. And all cost requires a valid justification. So you may think, what is a specialty here? In zero-based budgeting, we are trying to explain what you need, why you need, how many you need, when you need. Is there an alternative for that? This is the summary of zero-based budgeting. So there are a lot of changes happen. For example, technological changes, electronic inventions, which reduce the cost up to a great extent. If you go for incremental budgeting, we won't be able to capture all those effects into the budget. But through zero-based budgeting and activity-based costing, we will be able to reach up to that level of cost which you can have the real control of your expenses of your company. Quite often people do ask why we need a budget and why we need a zero-based budgeting through activity-based costing. Is it not a task done by the finance department? Very often people ask, well, budget is a exercise to be done by finance department. But under this method, every business has to prepare a detailed business plan, which includes their expected revenue and expected expenditure. Under CBB process, each business units and departments will treat as a unit, a strategic business unit or an operating unit, and the head of that department will be accountable for its revenue and expenses. I mean to say, each unit manager will be the CEO of their division, and they take care of, or they take the complete responsibility of their budgets. The unit manager should justify all the related expenses and revenue. Through budgeting, we can monitor where we are heading, and it will be like a GPS in our car. So the budget will allow you to set a clear objective and to know where you are heading. If you look on the business, so I have taken an example of an airline. We have all the sets of data available electronically everywhere. For example, operational data, like flight operations data, ground operations data, crude related data, and everything electronically available. For example, so further details like fuel, MRO, handling, ground handling, below the wing costs, ad hoc ground support equipment, and hotel accommodation, allowances, and all this information available there in the operational data. And on the other side, every company have a complete ERP where we accommodate all the costs like admin costs, procurement to pay, up to procure to pay, and the core finance. We have financial reports, MIS reports. So all the costs are there. But if you're looking, it's almost like a big data. But the alarming factor is, traditionally, the variance analysis, which is budget versus actual, will be done at the accounting head level. So no one goes to these kind of details, even though they are having all these details available there in various systems. So here is an example where I have done a study on one of the airline. You can see that two blocks. all these activities are available in one of their system. For example, number of landings, it is there on their flight operation system, which is called Lido or AIMS, or block hours is there in other system, and passenger count is there in the revenue system, and the average ticket value is there on the revenue system. Similarly, all the costs available there in one system or other, where you can reach on the real cost, rather you take an average cost or estimated cost, because you can reach, you know what is the activities which is going to happen, and these are the activities, and this is the system where I can look for it. In spite of having all this data, here is an alarming fact. 1 out of 10 airlines in the world using their data effectively. Only 1 out of 10. Every airline got the big data. And remember the gravity of it? The travel industry contributes 10% of the total GDP the global GDP. So such a volume of transaction, such important data which is available electronically, 1 out of 10 airlines are only using their data effectively. This is a study recently conducted by one of the Indian Institute of Management. So it will be all costs, all activities, everything is available in the activity level costing in any one of the system. This will allow the business owners to point the reason for the cost escalation. Unfortunately, very few airlines or very few business are going into activity level. So we all are very good in giving excuses. We will tell that we cannot do this activity level because we have no qualified staff to understand every aspect of the business. Or somebody may tell that retaining such experienced staff become a difficult task, or we have to pay more. So many systems are involved and process are involved, and system providers is asking huge money for creating interfaces. And somebody will tell my company doesn't need that kind of analysis, and we believe in cash profit and not on reports. So this all very fancy or practical difficulties what we are telling. But in reality, these all are possible if you are really interested on this. From my experience, if you are looking for your staff is not qualified or you don't have enough staff, and your system providers are asking huge money to create interfaces, here is the answer. You go for robotics. The robotic process automation will bring down the cost up to a great extent. And it will be, if the problem which I have explained on the previous slide, this slide, are existing in your organization, please go ahead with the new technology of robotic process automation. A robotic license can manage several tasks even on 24/7 basis. The investment required to adopt RPA will just a couple of $1,000s. RPA will reduce the burden of manpower resources, and the company can utilize their expertise for analytical purpose rather than on data entry. Many people tell, oh, this process got lots of feeder systems, we have to create interface. No, we don't need. If that is costly, we can adapt RPA, which a robot will do the task for you. Let's move to activity-based cost. In traditional budgeting method, the cost will be calculated on a summary level. But here in ABC, the cost will be on a detailed activity level. In other words, cost impact of each activities will be measured separately, not on a average level. Instead of taking fixed rates of the activities, we will derive the cost from the contract logics. Remember contract logics. While doing the budget at the activity level, organization will get a complete clarity on their spend and it can plan better for tomorrow. So this is a tool to control your costs. All the activities will be evaluated. For example, this is a live example which I experienced. One company was budgeting annually for printing and stationery on their additional incremental budget method. Every year they are spending X amount, so next year it will be X plus certain percentage. So that was the way they are doing. But when they deployed ZBB through ABC, now they know the volume of papers for the printing and stationery for the year, the total volume what they require, and the volume of printing they do outside, and the volume of hard bindings they do in a year from the outside parties. So they know exactly the volume also, volume of work what they have to do and volume of items what they need to purchase. A smart procurement manager use this data to negotiate with the suppliers for a better price, and he can schedule the delivery also rather buying all this item in bulk and keeping in a storage. So the activity based costing will lead you to lots of other activities within your organization which will lead to the cost reduction. Here is another example, which is another live example. While I was doing a cost review of two similar airports in a country where similar type of aircraft were operating, as a matter of surprise, one of the airport got a higher cost. The first airport, they were doing a remote handling. You mean to say the remote handling means they after landing the aircraft, they will keep the aircraft little far from the terminal, and the passenger will come on the bus. The first airport was doing this in a remote handling, and the second airport, they were doing a landing with a connecting aero bridge to the terminal. So this is the two different activities done on similar airport in one country. This is a live example which I experienced. And you know the cost difference here doing these two activities. For a normal man, it is a landing and its activities happening. For the first activity, the lot of activities happen. I just listed what all the activities just only for the behavioral change of this activity. In remote handling, we need to transport the passenger from the remote place to the terminal. So the passenger step is required. Passenger to come out, 2 steps will be used, and each step will be paid charge on $275. And we need to use minimum 6 buses, 3 buses for the passenger to come out at the rate of 125, and we need to use crew bus to transport $100 each, and we have to use ground power unit for 90 minutes minimum, which is costing around $280. So total cost was $1,780 for this activities. But when it comes to the same connected to the aero bridge, the airport takes certain royalty, which is around $400 per flight. And instead of ground power unit, we can use the fixed power unit, which is there in the bridge itself. They will charge for 90 minutes $300. So that means here my cost is $700. So while doing this, we got a difference of $1,080 per flight. That's such a competitive environment. The cost difference for the similar flight in similar airport, the cost difference is $1,080, which means a monthly savings of around $64,800. They were operating 2 flights a day to that destination, so 64,800, and annual savings of around $777,000. So it's a substantial amount. So you see the beauty here. If you take an average cost, we won't be able to reach on that average cost because everything will be hidden within the average cost. But when I went into activity-based costing, I know exactly each item costs how much and is that required? Is there a cost-effective alternative? So I went for the cost-effective alternative, and which I saved $1,000+ per flight. So that means I'm trying to identify the cost behavior and I'm doing a cost behavior analysis. So this is really called the activity-based costing. So while you club the activities-based costing along with zero-based budgeting, you are getting 100% clarity on what is happening on the ground, and you can pinpoint to your expenses. So let's move to zero-based budgeting through activity-based costing. So what are the steps involved? The step one. So the first one is you have to collect the data for every activity. You have to collection of revenue and expenditure data from each department or strategic business units or from the sections. So in what form? It will be on each activity. Each activity will be weighed and there will be a comparison between that before you bring to a contract system. I will explain that further. And the second step is build the contract logics from the contracts master. What is this contract master? The contract master is a database of all the contracts with the logics involved on each level, and where when you bring the activity, when you apply the logic, you will get the cost of that activity. So similarly, you have to the heart of zero-based budgeting through activity-based costing is the contract master or the contract management system. So this system, we had to do it in a very, very detailed manner, accommodating all the logics involved in the contract. So then the third step is set up cost distribution formula for the centralized cost. So the first step, what I meant to say, the activities means the operational activities. Here, step number 3, what I am talking about, the head office cost. The head office, you have a lot of costs. You will be capturing all those costs and you have to create a cost distribution method, whatever you are using in your MIS. And then process the activities with the contract logics, format into meaningful heads. Then you will bring into a meaningful report. That will be your zero-based budgeting. I will explain to you further with the help of certain slides. For example, the collection of data. On this collection of data, these are all the activities which is happening in the airport. You can see a bus, small bus, big bus, and passenger steps. Freight loaders are there. Then you can see the passenger steps are there. Then conveyors are there. Then fueling is happening. There are a lot of activities happening. And every activity happening in the airport covered under a standard ground handling agreement. This agreement is a standard agreement. If you are making a contract master with one of this format, there are three versions of standard ground handling agreement, or in short form they call as SGHA. And against each SGHA point, you are building up your logic, and it will be easy for you to capture the data very effectively. And for example, on incremental budgeting, the airline was using the fixed turnaround per aircraft. Under ABC, turnaround got divided into various activities, and cost is built up on each activities by connecting to the contract logic and database. What I mean to say, on the earlier slide, I have explained all those activities. Earlier, it was taken as some cost as an average. But on zero-based budgeting through activity-based costing, we take the cost on each activity and bring into a database and connect it with your contract logics, and we will derive on the cost. So the left side is the traditional method. We'll say that, okay, now we take an accounting head and you say account number blah blah XY. So then which location is that? Then you put, okay, this is the amount. So normally this is the way which budget goes to the system. But on our method, we split into further division. So if you say on the left side is the only 3 divisions, here right side is the 6 divisions. So it will be on accounting level. That means it's the operating cost or non-operating cost. So then it's in accounting level 1, and accounting level 3 will be what is the type of the expenses and where it's happening, which is below the wing, or then what is his activity? It's a wheelchair. And then the level 6th level will be date or flight number, location, which can identify that activity from there. So what I mean to say, this will be much detail. You will have 100% clarity on what is happening in each place. And zero-based budgeting through ABC, the activity by units. And the second part is contract logics and rates. And then we will derive on centralized cost allocation. By doing all these 3 points, we will reach on divisional budget. Each division will be having a budget, and that budget will be consolidated by using zero-based budgeting through activity-based costing. So further, this is a diagram normally we do in airline. For example, the first activity is starting from your operating plan. The operating plan have where you're operating, how many flights you're operating, what time you're operating, and what is the block hours, which type of aircraft you're operating. So all this information are available there in the operating plan. And then each flight, what all the activities which is happening in the airport, for under the wing and above the wing, and what is the manpower you require, and what is the fixed assets you need, and a lot of fixed assets you may require. So that is the first set of information. And second set of information is about head office overhead. What all the head office overhead which is happening at the head office level, and then both you bring into a cost and contracts management system. So, or in short form, we call a CMS, cost and contracts management system, and populate the cost over there, and the volume of your production, your revenue and expenses will be based on your operating plan, and then you are creating your divisional budget, and that divisional budget will be consolidated into global budget. So many of you wonder, how can we create a contract master with rates and logic. So here is the one which I made. So this is in a system like you can see further. For example, I'm not given an exact rate for the first example, the airport charges. Airport charges under SDHA, we can see that the aircraft weight is given there. This weight to that weight, and what is the rate and all the things. So this is the way which is built up. The moment you give the location and all the things, so it can populate the cost, and it can report to your budgeting module. So this is the example of a contract master. So I have done further things on it. And what I done, I have all those data available on a soft form at activity level. I do get all the activities from various systems when it's happened also. So even my analysis I have done at activity level. For example, budget versus actual, normally every company will do on a financial accounting, an account code. Here, I have done my variance analysis at activity level. Then I will be able to reach which activity is more and which activity is costly, where I can get a thought process like which activity I have to look further. A complete clarity on the cost at the lowest level of expenses, and cost comparison between similar units and similar airports where I'm operating. So here, what I have done is I have all this data available there in my flight operation system or ERP or other data, whatever is happening where I have it on, and I will capture on activity level. And I have the budget on the activity level, and I have the contract on the activity level. So then I can create my own self-invoicing option. So then I can take it for my accrual, rather I wait for my vendor to invoice me. So this is the way I can create my accrual also to the system. So here is another option. So what I done is the third phase. This is the final phase of it, and the beauty you get it. When you get a supplier invoice, you don't need to wait for somebody to account. I do the technology in robotics or OCR or other interfaces electronically. Then I get an invoice electronically. That invoice will convert electronically into my cost management system, and each flight level the activities will be evaluated, and it will be reconciled, and it will find out all the errors and omissions and all the things. And if it's correct, it will post to my ERP. And if it's a error or if it's a mistake, it will keep it separately to somebody to attend and communicate on that one. So what I mean to say, it is impossible for an accountant to verify all the invoices with 100% accuracy. Typically 1.5, 1.7% errors and omissions are happening in both sides, from the vendor side and the supplier side and the receiving side. So the errors and omissions can be completely eliminated, and you can get, so the one side you have your budget on the activity level, and second, your activities are reported on a daily basis from your stations and operating systems, and you already created an accrual in your system at activity level, and you will receive an invoice on an activity level, and you have electronically, your system can check electronically and throw out the variances before it take to ERP. So this is the beauty of your system, which is linked in various ways. So I think it's a big topic which I explained it in very detailed way, and the time is limited, and I used all this one for various purposes. It is linked to my road profitability system. It linked to my road costing system. So I can do all this analysis from activity-based costing. So the best option for any business to find out the cost, find out the reason for the cost, is only one answer, which is your zero-based budgeting. And many people will find out a lot of weakness and strengths on this one. So you can read, okay, here I mentioned what are the strengths, the SWOT analysis is here. So if you require any assistance, and if you have any questions, or if you have any concerns or suggestions, please feel to contact me. I'm more than happy to explain all these things to you. So within 30 minutes, it's a topic to be presented in 6 hours or 8 hours time. So I've tried to contain myself within this 30 minutes time. So I know that few of the points are become very fast, and you may have some question. So please feel to answer. Please feel free to send your questions on this email, or you can do WhatsApp chat with me on this one. So thank you very much for your time. So have a nice day.